Hello everyone, this is Jordan. This video is being recorded on Monday, September 9th, 2024. Thank you for joining me for this edition of Macro Mondays. Coming to you a little late. I know it's afternoon, evening time, but had to get this out for you. And today I'm going to talk about how the fundamentals for both gold and gold stocks are starting to strengthen, and how I think maybe in 3 months, 6 months, somewhere in there, the fundamentals for gold and gold stocks could be very, very strong. Let's get to some charts. Okay, so first, I call this my gold macro chart. We have a bunch of different data in here. We have the Fed funds rate here, yield curve, difference between the 10-year yield and the 2-year yield, the stock market here, S&P 500. Then we have gold divided by the S&P 500. And then we have the real 10-year yield. And so we've been talking about this in the past few weeks, the past few months, and this is the key thing that's happening right now, key development, I should say, is the yield spread between the 10 and 2-year, which is what most people follow, is steepening. I mean, if you're not saying steepening, it's rising. So it's been inverted for a record amount of time, I think even more inverted than it was in 1929. But being inverted is not necessarily negative. It's when it uninverts and goes positive and then steepens. So the real question is, will this continue to steepen and rise really aggressively, move like sharply higher? Or will it just meander around the zero line? Because there's a few examples here where it meandered around the zero line and you didn't have a recession. Like here's one where the recession was in 1990, not that long of a recession. The yield curve, it uninverted in early 89. But then you can see here it meandered around for a while before really steepening. And same thing happened here in the late 90s, 97, 98, 99. So the curve, I guess it inverted and then uninverted by a very, very tiny level. Steepened a little bit, but for the most part, you could see from the end of 97 almost to 2000, it just meandered around the zero line. And you didn't have a recession until 2001. And then here you had the clear, sharp steepening above zero. Same thing happened here in 2007. So that's the question now. It has gone positive, so this is a real red alert thing. But will it continue to steepen and move higher aggressively, or will it just meander around the zero line? I tend to think that it's probably going to steepen at least somewhat aggressively. I don't think it's going to meander around that line because I do think you're going to see some Fed rate cuts, maybe the long end of the curve, the 10-year. At some point, the rate will probably start to firm and stop falling, and so that's how you could kind of get the steepening. So that's my view. Look for some real steepening there eventually. So I think it's going to signal a recession, at least a soft recession, and that'll be negative for the stock market. And this is the key indicator for precious metals right now. Gold divided by the S&P 500 closed at 0.46. And this is setting up, boy, I've said it before, I'll say it again. If you get a big move like this, and if you get steepening, real steepening, this is what will happen. You get a big move like that, that's setting the stage for gold to go a lot higher, not just 3,000 or 3,500. It can go a lot higher if that happens. And the last point on that, this line marks the start of rate cuts. And so gold against the S&P, it really started to perform after rate cuts started. So you can see here, this is another example here, 2019 here, it took a little bit, then more cuts with COVID. So this is setting up for, I think at some point in the coming months, a big move higher, a big breakout above 0.50. And I threw in here the real 10-year yield, because with these rate cuts, we can see that starts cuts here. The real interest rates are going down. They started down here. Then you got more cuts. So what's happening here? This has already started to move lower. Then it'll accelerate more to the downside as we get more cuts. So looking at the macro for gold, I think it's safe to say that it's setting up very, very positively for gold and precious metals beyond that once gold gets moving. So let's look at gold against a number of markets. Here we have gold against commodities. I mean, the rest of these charts are gold against stocks, but gold against commodities, I mean, this is broken out, so this is looking super bullish. I mean, this is, what is this, 3.5, yeah, like a 3.5-year high, breakout a couple months ago, just beautiful pattern, breakout. If you look at gold against the CRB or gold against oil, it looks the same. This is gold against the equal weight commodity basket. So, I mean, this is a real positive for miners and mining margins over the next few quarters. So, outperforming commodities, that's exactly what you want to see. And coming back to gold against the stock market, I like to break this down and look at more ratios beyond just gold against the S&P 500, which is here. Here we have gold against the equal weight S&P 500. So this is all 500 stocks equal weighted, gold divided by that. And this is setting up for this is a very bullish pattern here. It's setting up for a move in the coming months to make a move like that. Gold against the NASDAQ. We know that the Mag 7, those tech stocks, they have been holding the market up, holding gold back. And it's interesting because looking at this, you could have a monster double bottom here where this is the first, and then this double bottom here is actually the second part of a big double bottom. But here, this could also be a mini double bottom here. So I like the action here. Closed at 557, really close to breaking above this resistance. So if we get some follow through here, and not much has to happen, this could break out, and that would be a new 52-week high. So who knows? Maybe this looks like it could break out before this here. Ultimately, once we see gold outperforming and breaking out against the Mag 7 tech stocks at large, that's a really good sign for precious metals. So keep an eye on this chart because I think it's going to lead this chart. And look, I'm just a broken record here. I don't even need to talk. I can just insert something I've said in past videos or even something I said a couple minutes ago. 0.46 here, 0.50. This baby breaks above 0.50 and you get some follow through. That's heaven. That's nirvana. That's turbo nirvana for gold and precious metals. So that's what we need. And again, a breakout here, that's going to be 3.5-year high. So the charts are setting up very bullishly for precious metals. Maybe not in the next week or the next month, but I do think eventually we are going to see gold against the stock market finally break out. And one point on that, if you look at the stock market just in nominal terms, it looks tired. It's due to, even if it's just a mild bear market, you'll get all these rate cuts. Fiscal stimulus could come next spring. And you look at gold in nominal terms, gold in nominal terms is in position to continue to trend higher, whereas the stock market looks kind of heavy. So looking at those individually, I can definitely see this sometime here making a big breakout to the upside. That's a huge game changer, people. And last thing, I talked about how gold is really outperforming the commodities here, and this is a really, oil especially, all commodities really. And that is a really good sign for mining margins. And I just want to remind you, this is gold against the CPI. This is close to breaking out of a 45-year base. And you look at the Barron's Gold Mining Index, you can see that gold against inflation, that's the best fundamental indicator for gold and silver stocks. If we see a big move higher in gold, a continued move higher, we're probably going to see this thing move up here like this, and these margin increases, they're going to flow right to the bottom line for mining companies. Like, cost inflation is not a problem. So that's why over the next, call it 6 to 12, 18 months, we're setting up for a real sweet spot here for the gold stocks fundamentally. So that's it for the video. Let me know what you think. Please leave a comment, and I'll talk to you guys again in another video on Wednesday. Thank you so much.